Hey, I recording this video on Sunday, 3rd of January 2016, and a very happy new year to you. So, there's been nothing on the Emini-Watch website in terms of new videos for a good long time. End of October, I think, was the last time I did a video. There's a good reason for that. I'll tell you about that in a second. But this video is going to be about the global macro picture, I think. So that's kind of an appropriate topic at the beginning of a new year. Going to rip through the global macro charts in terms of currencies and markets and just show you what I'm seeing on my charts. But before getting on to that, just as a quick intro, nothing on the site, and that's because we had a pretty major medical issue / emergency, and it was time to take a break from trading, focus on the family. And trading from Australia this time of year, the trading day kind of starts at 11:12 at night, and that's pretty rough. With time changes and stuff, it's actually been kind of 12:30 at night, and just with what's kind of going on, that's been kind of inappropriate for me. I wanted to spend more time with my family and friends, and so that's what I did. Just backed off a little bit. Still been working in the background on the multiple time frames and getting indicators and getting those out, and doing some cleaning up kind of little tasks around the website, and also kind of looking after other business. But in terms of trading and Emini-Watch videos, just decided to back off entirely. So I hope you'll kind of appreciate there was a good reason for that. In terms of, this is a public forum, I'm not going to tell you all the details of what's kind of going on. Things are a lot better than they were a few months ago, but we've still got a couple of months to go before we're all kind of in the clear, done and dusted on this. But these things happen. Life, shit happens. Life changes. You have to change your schedule, your priorities, and so on, and that's what I've just had to do over the last 2 or 3 months. But hopefully in 2016 get more, certainly get back into trading in the next 2 or 3 weeks, do more in terms of the site. There's a couple of things I've got in mind for Emini-Watch in 2016. The first one, the highest priority, is getting out the multiple time frame indicators. I know I've been saying this for weeks and weeks, and I do apologize, but it's the nature of the beast, I suppose, with software, and I'm waiting on some stuff. I've also kind of been waylaid on other things and just not had my head in it, but hopefully we'll get the multiple time frame indicators out, and as soon as they're out, you'll be notified on the website. So that's going to happen. The other thing I want to do with the Emini-Watch website over the year, next year, is to do some bigger pieces of content, some kind of bigger thinking pieces. I'm getting very interested in the pros and cons of kind of system trading. I want to give you some thoughts on that. I've also been planning on a high-level kind of global macro strategy using ETFs that I want to kind of present, kind of go through with you. That's kind of been of interest because I've not been day trading, but I'm interested in taking a couple of kind of big positions, kind of longer term type positions, and so I'll be going through and thinking on how to take those. And if you're not a day trader, that might be of interest as a strategy for kind of taking positions for kind of medium term type trends. And then there's a whole bunch of stuff. I want to talk about health and trading. I want to talk about Larry Williams and the experiences and lesson learned from trading with him. A whole bunch of stuff. So I'd like to do some of those bigger kind of pieces of content and get those out rather than focus on a lot of itty bitty little day trading videos. But there'll be a smattering of those as well as things kind of pick up. So there we go. Quick intro. Everything's kind of fine here. Thank you for everybody's messages and so on. Let's hope 2016 is a fantastic year for you, me, and everyone. So global macros. Split this up into two things. The first half of this, where is the money running around the world? Where is capital flowing? And look at it in terms of currencies. What countries? Where is it flowing in terms of countries? And then where is it flowing in terms of assets? So I'm going to go through the currency picture first because that's kind of the cleanest of the lot, and then go through the kind of asset market view secondarily. Now, I've been bullish on dollar index for a good long time. I'll probably put a link to a video in the notes on this post, just talking about 2013. When was it? Kind of back in, I think, March? Yeah, end of March 2013 is when I started getting bullish on dollar index, and for me that's been a very good trade because a lot of my spending is in Aussie dollar, and the Aussie dollar has collapsed in that meantime, and the US dollar has strengthened across all the currencies. Now, what I'm going to be running through with these charts is the multiple time frame indicators that will be released shortly. They kind of break them up into two views. This first one on the right hand side is a more systematic view, and this is what people have been asking for over the years with the better indicators. How do you determine trend using the better indicators? Can you give me some real kind of rules? And here it is. These are the rules. I'll do a proper video on this with all the details of how this works, but basically when you see red bars there is strength in the market, and when you see white bars there is weakness in the market. And these are the multiple time this is a better sine wave on multiple time frames, 3 different time frames put on a daily chart here. And then because Better Pro-Am uses kind of the vertical bars to be colored, I want to see where the professionals and amateurs are playing. That's this kind of view here without the systematic view, and then Better Momentum is down on the bottom. So it's 2 kind of windows that I look at. I look first of all at this window to say, have we got strength in the market or weakness in the market, red versus white bars, and then can I see where the professionals are playing, so I can pick up clues as to where they're kind of in and what's likely to happen next. So dollar index has been in this massive uptrend since 2013. We started the bottoming process. We tested back into 2014, and during 2014 we started to take off. We took off into this big uptrend move where we kind of topped up into a cyclical pattern here with nice little end of trend exhaustion buy signals. We tested back under the cyclical resistance, so we had pullback to end of trend on the lowest time frame. That's kind of got these little light bars here, and then pullback to end of trend on the intermediate time frame, and that was all underneath this kind of shadow of resistance on the highest time frame. So you got these little weak little bars on the lowest time frame, these kind of more solid lines on the medium time frames, and these big solid lines on the highest time frame. So after that kind of topping out kind of process, or just reaching a maximum here above 100 on the dollar index, we had some weakness. We had a few months of weakness kind of here, and then the dollar index kind of set off again, and I put out a little post just with a chart, no video, just saying that this was a really important kind of test into this area, and that now we've got strength. You can see we've got red bars kind of going on here. We've got above 100 is going to be critical level. We've got resistance on the highest time frame, the intermediate time frame. Got a little bit of strength with kind of Thursdays, Friday, Wednesday, Thursday, Fridays kind of trade, and what I'm looking for is 100 to be broken to the upside and to break this into a nice kind of strong uptrend. The reason why I think it's going to break to the highs is, this is the exhaustion pattern that we had, but that was a good long time ago. That was back in April, and then subsequently what we've had, on this chart you can see these dips down. Professionals buying the dip, and we know they're buying because we don't go any further than the low of that blue professional bar. And then this one here, another big kind of ranging blue professional bar. Yeah, we crested a little bit kind of above it there, just kind of push it, freak people out a little bit. I know there was some amateur low volume type kind of activity here over Christmas. That's a little bit dodgy. Remember Christmas, it's all the amateurs kind of get involved at Christmas time because they've got some spare time from their day jobs, but the professionals aren't particularly active during that time frame. But this big blue professional bar, big blue professional spiky bar, I always say, is like wait for those to get confirmation breaking each way. We had a little push below. No, that we come back immediately into the zone. We come back to the bottom of that zone. We're kind of playing up through that zone, getting through this 100 level. That'll break us into a big kind of uptrend to the upside, and the dollar index continuing to strengthen. So that's what I'm looking at on these charts. You'll see these big blue professional spiky bars, the reverse of that on the other currencies, because they're all very similar in terms of the picture, just flipped upside down. So there we go. Dollar index, I'm still kind of bullish on dollar index. Still holding most of my capital in dollar index. I did take profits on my short Aussie stuff. It was a good long time ago now. It was kind of maybe 4 or 5 months ago. But anyway, so yeah, still bullish on the dollar index, and I'm looking for that 100 level to be broken. So the flip side of that is, let's talk about the British pound first. And I said the pound was the strongest of the lot a few months ago, and that all kind of ended. So this is the downtrend in the pound that we had, 2014 to 2015. The reason why we had strength in the pound, look at this combination. We got pullback to end of trend on the lowest time frame with these little light little lines, then pullback to end of trend on the intermediate time frame, syncing up with cyclical support on the highest time frame. So we had all of these support levels kind of coming in here that weren't getting broken, and that led to this strength that we had for 4 or 5 months over the middle to end of last year. But British pound has stopped all of that, so now we've come into resistance on that, and we're testing down. This was a bad couple of days for the British pound, where we kind of sink into these new lows, and potentially we're going through this 145 kind of level down here. And you can see that on the better pro-am guys, like big blue professional spiky bars, this one, we test the top of that one and then test it again, and then bang, we're through it again, we're into that range, coming up test, we're through the blows of these blue professional bars. So on those big days, that's when the big money's kind of getting active, taking positions, and we're breaking supports, we're breaking the lows of blue professional bars, having just pushed up and tested the highs of those, reversed, gone the other way. We're in a downtrend on the British pound, and this isn't over until we see an exhaustion sell on the downside. So there's going to be some fireworks on the British pound to bring in that exhaustion sell type volume there. So the pound is the flip side of the dollar index. Dollar index is strengthening, the pound is weakening after we had a good few months of some strength there, but now it's all come in and we're breaking down. We've got to see pullback to end of trends, exhaustion sell on the downside, and so on. So there's the pound. Now euro, similar picture, but this was this really unusual big blue professional spiky bar the beginning of December. Look at that, bang. We push and push and push, test back into that, and we're now coming back into the zone. I tell you, the breaking of that low is going to be key at 105 on the euro. So we've had this U-turn kind of going on here, blue professional bars, they give it away, and then they sell it down here through support into downtrends. We come back up, freak everybody out, 106, and then we pushed and pushed, and then getting through the low of that blue professional bar, 106, 105, will be kind of confirmation that we're on the way down again. And this you can see again, we're breaking through on the highest time frames to pull back to end of trend on the highest time frames. All white, just like the British pound, we had a few months of strength during the middle of the year. I mean, this was, I think, all the Greek stuff, and the pound was the euro was kind of going down. Everybody was kind of freaking out about Greece. Greece has gone kind of quiet. It's a bureaucratic takeover there by the Troika in Greece, and so we're back into downtrends and weakness on the euro, and we're not going to see the end of this move until we get exhaustion sell on the downside. So that's the euro. Now, so those are the European currencies, the pound and the euro. Let's talk about the commodity currencies. So we got the Canadian dollar and the Aussie dollar. And down. Canadian dollar has been just wrecked, having topped out like the Aussie dollar, kind of up here at a parity, just above parity with the US dollar. We've been in this big downtrend. You can see we had a couple of little bit of strength here, fraction bit of strength here, but then it's just white bars all the way down. We got exhaustion sells that we're bouncing from on these left shoulders, but we're still looking for pullback to end of trend on the highest time frame. We've still got to make that pattern here, and until we see that, this downtrend is not over. Potentially, we've got a flush pattern here. It's pretty severe down here in the 70s. We could start to form a bottom around the 70s, 72s, but we'll have to test back into those lows. We'll have to put in pullback to end of trend on this highest time frame before we start seeing that bottom be made. So it's getting interesting around here, and a lot of the commodities are getting interesting. Aussie dollar, similar picture. So the Aussie dollar, we kind of peaked up here, pull back to end of trends, just under parity here on the futures contract, and it's been a downtrend ever since. Downtrend, little bit of strength here from support to resistance. We end up breaking into another downtrend, all these white bars here, bang, 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 bang. And again, we're below cyclical support on the highest time frame, this really solid bar, so we've got to see pullback to end of trend on that, on the Aussie dollar. Again, 70 cents, the Canadian and the Aussie dollar are just interesting that they just kind of move lockstep. Down here, have we seen exhaustion sell? No. This is the exhaustion sell that got this move going back into these kind of low 80s down here. We got to see that similar thing. It's the Aussie dollar has not moved in 3 months. We've just been hanging around this 70-72 kind of level here. We've got to see an exhaustion sell, a real capitulation here on the way down before this one's over. So yeah, Canadian dollar, you can see it bouncing around a little bit, but I'd look for those two to be moving together, the Aussie and the Canadian, until we get that capitulation volume, an exhaustion sell kind of going on. We're still in the downtrend. We could have little rallies, that's perfectly kind of okay, but it's not over on the downside until we see that kind of real capitulation. Japanese yen. Now, Japanese yen's interesting because down here at 80 cents, we have kind of been bottoming for a year. I mean, it's been big moves kind of around here, but for the last year we've been hanging around that 80-85 level. And here's the exhaustion sell that we had on this left shoulder. We then make some pullback to end of trend type moves, and then we get this interesting. This was a short covering rally. This big blue professional spiky bar with that exhaustion volume, that's a short covering rally, bang, and then we come down to the downside, break through that big blue professional spiky bar. This one's another one, big blue professional spiky bar. We've come up a little bit above it, little amateur up bars, but again, it's Christmas time, light volume, low average trade size, so I don't know. If we come back down into the zone of this blue professional bar, then I'd look for this 81 level to get broken and we kind of go to the downside. Maybe we're going to have to see, having had that exhaustion sell kind of on our left shoulder here, we've still got to make pullback to end of trend on this highest time frame here, and probably another kind of exhaustion pattern, because that happened a long time ago. So we're going through a little bit of strength on the Japanese yen at the moment, but it's interesting levels kind of down here. So there we go in terms of currency. Still bullish on the dollar index. I think we're going to break through the 101 kind of level on dollar index, and I think there's still more pain to be had on British pound, euro, Aussie dollar, Canadian dollar, and so on, until we see those real exhaustion type patterns. Now, why is that kind of going on? Well, we've got these commodity markets that are just getting torn to shreds. Going to talk about copper and crude because those are the big ones, and they kind of help you judge commodity markets and global growth. Now, copper, you can see here, has been a nice kind of downtrend since July this year. We were fussing around here, then we broke into this downtrend. It's all white bars here, white bars kind of going on, pullback to end of trends. Now, the reason I'm kind of interested in this now is at $2 down here, we've had an exhaustion sell signal. You can see that there, exhaustion sell and little bullish divergence around the zero lines kind of coming. So at $2 a pound for copper, that's looking interesting. But again, here's cyclical support on the highest time frame. We still have to make pullback to end of trend on the highest time frame. But maybe, around here, around these prices, this left shoulder is going to start to be formed in copper. Same with crude. Now, crude has been this mega downtrend from 110, 120 kind of up here. And this is where I lost a bunch of money going long crude and made a bad mistake and then didn't get out until I'd exhausted 30% of my position, and that was enough for me. We've had this big downtrend. You see all white bars on crude, bang, 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 bang. And we've got, this is the exhaustion cell getting the move going at this point here. So let me just rip to this version of the chart. This is exhaustion cell getting the move going. And now again we're revisiting exhaustion cells kind of down here at 37s. And all of a sudden a whole bunch of blue professional bars coming in with exhaustion cells. That's interesting. So potentially we have the beginnings of some kind of bottoming in crude kind of happening. But before that, we got confirmation of that. We've got to see a whole bunch of things go on. We've got to see bullish divergence come in. We've got to see some nice pullback to end of trend signals. We've got to start to break above resistance into an uptrend and then test again. So it's the early days potentially of that bottoming process. So 2016 might be interesting for bottoming, second quarter in terms of crude and copper. That's interesting. And then as a result, Aussie dollar and Canadian dollar will start to strengthen with those as well. So that's an interesting play. And if you're down here in Australia, the equities market here, which is heavily commodity based with major miners, world miners kind of down here, the dividend yield on the Aussie index, the ASX 200, I think is up at like 6.5%, 7%, something like that. It's getting really attractive in terms of dividend yields. So is the Russian market. The rubles got destroyed, but if you're interested in kind of buying into the Russian market, this year, the first half of this year might be an interesting time to kind of jump into that. Again, the Russian market is Gazprom, it's gas and oil. The currency is destroyed. The commodity markets got destroyed. So I'm looking for the first half of 2016 to be a bottoming process in those commodity markets and those commodity currencies. I think that's going to be an interesting kind of play for the first half of this year. On the side of gold and silver, now, last video I did on gold and silver, I said I didn't think it was in it. We had this strength in the silver market kind of going on here. I said I don't think that's enough. I know there's big blue professional spiky bars and we've rallied from there. The thing that I hadn't seen when I put out that video, kind of back here, was that we hadn't had exhaustion sell on the downside. On silver here, we've had exhaustion sell getting the move going here, exhaustion sell. And then on the flip side, everybody rushing into these short covering rallies and people kind of getting all excited. I said, I don't think the silver market's done on the downside until we see exhaustion sell. Well, that's what we've had in the last month, exhaustion sell kind of down here. I also got quite a lot of pushback on that. People saying, oh, I'm buying gold and silver now. I think the bottom's in. Well, now we've seen exhaustion sell. We can start the bottoming process potentially in silver and gold. So that's kind of coming in, but look, you're still white bars kind of going on here. We've got to start breaking to the upside, testing, and then getting long signals on the systems before silver kind of gets interesting. But again, that's an interesting kind of bottom going on there. Gold, same thing. Gold, we had not seen an exhaustion sell on the downside. October 2014 was the last time we had an exhaustion sell signal. So now a year later, we get another exhaustion signal down here, getting mighty close to $1,000 on gold. So that all of a sudden, that looks like the very early stages of the kind of setup that we would have for reversal of market in gold. But look at this, we're still below cyclical support on gold, so we got to put in pullback to end of trend on this highest time frame, this really solid bar here. So got to wait for all of that cyclical and trending energy to be exhausted, and then for the breaks on the upside to kind of happen. So gold and silver, and it's not gold and silver. I'm kind of in Martin Armstrong's camp here. This gold and silver strength wouldn't come from weakness in the US dollar necessarily. It's more a play about just global political uncertainty, and my God, we've got enough of that kind of going on at the moment. We're going to see a resurgence of the euro crisis. We're going to see a resurgence of sovereign debt defaults in emerging markets, and maybe some municipals getting in trouble and so on, and we've got Puerto Rico to kind of deal with. All of these things kind of we've got to look forward to in 2016, and so that would be why people kind of get into gold and silver, because they're just scared of everything else, not necessarily because weakness in the US dollar. So there we go. That's all the global macro markets except equities and bonds. So let's talk about those really quickly. First of all, I'm just going to revisit the short-term picture and the seasonal patterns in equities, because in the last few months we've had two seasonal patterns. We've had the Thanksgiving kind of strength, and we've had, or we're in the middle of the Christmas rally, the Santa Claus rally kind of going on. Traditionally two areas where we get kind of strength in the market. Now this is a daily index of the E-mini, and this is with my seasonality indicator that you can go to on the website, pick that up for free. And these are the two patterns. So this is last year, 2014. where we had the seasonal strength in Thanksgiving. It's holiday time, people feeling good. We usually have a little bit of strength in the market. And then this, between the red dotted vertical lines, this is the end of year kind of Santa Claus rally. And again, it's a little bit of people kind of feeling good over Christmas time, but it's also some rebalancing of portfolios and equity inflows at the beginning of the new year. Last year, in 2014, that seasonal strength in Thanksgiving time was pretty weak. We didn't have a big kind of rally going on there. The Christmas pattern, we had a nice little kind of set off with this big bar here. A little bit of profit taking at the end of the year, right at the end of December, and then a little bit of strength into the into the first few days of January with that kind of rebalancing and kind of fund flows into equities and so on. So similar type pattern kind of going on this year. We had a little bit of early strength on Thanksgiving this year, but then it kind of gave way to some weakness kind of going on here. So it wasn't really a decent kind of seasonal trade kind of going on. The second one, which was kind of setting up here, we've had some nice seasonal strength into Christmas, and then a little bit of weakness at the end of the year with some profit taking. And I wouldn't be surprised if we had a little bit of rebalancing, the beginning of the financial year with a little bit of strength kind of playing into that seasonal pattern here. The forecast will start to play correctly on this indicator when we get kind of the next month's data. It's just because it's the end of the month and those are all just showing zero, but really they should be showing a forecast like that of some strength into that beginning of the year. I don't know, I suppose I could improve my coding on the seasonal indicator around those month changes. There's always a little bit of a glitch kind of going on there, but I've never kind of spent the effort to kind of fix that. So we had some strength, some weakness last couple of days. I think we might get a little, that needs to hold over the first couple of days of the year, and we could get a little bit of a bump during the first week. So that's kind of a short-term pattern that I'm kind of looking for. In terms of where we are with equities on the global macro stuff and the multiple time frame indicators, we got strength going on here. You can see here on the system side of stuff, we had pullback to end of trend, cyclical support coming on the intermediate time frame and the highest time frame. All of that held, and we broke into an uptrend, and we're breaking through cyclical resistance on the uptime. That's showing kind of strength. We've had a cyclical resistance kind of come in on the lowest time frame. You can see that little white dot there, which is 2075. So that's kind of come in there. We could have a little bit of a test down Monday, Tuesday's trade, and then getting above this 2060, 2075 kind of level, and then 2100 will take us into a rip-roaring kind of uptrend kind of continuation there. So at the moment this is showing we've still got strength in equities, and the background is that we've got exhaustion sells and bullish divergence kind of going on here. If we look at what the professionals have been doing over this time period, this was the sell-off that we had into December. Blue professional bars picking up the lows, and then the last weakness that we had, blue professional bars kind of picking up the lows. We've come pretty hard down with the last couple of days kind of activity, but we've got some cyclical resistance here on the intermediate time frame and the highest time frame, both these levels 67.75. We bust through that in the first 2 or 3 days of January, and that kind of gets interesting. Takes us into a continuation of this uptrend, and we have strength in the equities markets at the moment, and we have strength in the dollar index. So let's see if the money kind of continues to flow at the beginning of the year. Medium-term time frames. So this is the 4500 tip bar chart. This was the strength that we had. So let me just show you this. These yellow bars are the beginning and the end of the day. So this is what was that? Friday's activity, Thursday's activity, and so on, going back a few days. And we maxed out pullback to end of trend on the intermediate time frame and the highest time frame, exhaustion buy kind of going on there, and that's what led to this weakness that we had kind of going on here. But we got a little bit of a confluence kind of going on after we've had exhaustion sell. That's exhaustion sell kind of getting the move going, if you like. This is exhaustion sell maybe putting in a left shoulder. Got a whole bunch of blue professional bars. Now that's end of year stuff, so I'm not sure about that. We'll need to test back down into these lows with blue professional bars. But we got pullback into intermediate end of trend on the intermediate time frame. We still got to put in a little kind of support on the lowest time frame that doesn't get hit. We got support on the highest time frame here. We could have a little bit of a confluence kind of going on here that would lead to strength, but we got to test it. Monday, Tuesday is going to be a little bit of testing activity that could lead into a little bit of a rally. So that's equities. So I'm still kind of bullish on dollar index, still bullish on equities. Bonds, you know, I do not know. This one I do not know. Let me just show you. First of all, this is an important level kind of out here where we had all these exhaustion patterns, end of trends, bearish divergence kind of come in. This left shoulder at the end of 2014. That was a really important level. Then we had weakness this year, and we've been held up by support on this highest time frame, which is a pullback support level here. It's showing strength at the moment. Getting through 56 will be absolutely key. If we do that, then we'll have bonds rallying as well. But if we start to break down through this support level here, and that continues, and then we're through support here and so on, 50 on the 150 on the downside will show, you know, we got real weakness in the bonds, but breaking through 55, 56 will show that we've got kind of strength. So I think it's kind of indeterminate. The reason why it's not all over in terms of bonds is we haven't seen an exhaustion buy since 2014. That's a long time ago. For this market to really top out properly, and for us to see a concerted rally in rates that is secular, long term, we got to see that. And it was so long ago that we saw that exhaustion buy. I imagine that we'll have to see another exhaustion buy, what will be a year or almost a year and a half kind of later. So that's why I'm looking for these trend breaks above 55, 56 on bonds as confirmation on the way up, and then break of 50, confirmation of weakness. So we'll kind of wait and see on bonds. It's the one that I don't know. The market doesn't know either. It's like we've just been playing in this range for a good long time. But surprises is what brings in the exhaustion volume, and a surprise above 155, 156 here, and then breaking into the 60s will bring that surprise volume in, that exhaustion type volume. So that's kind of a potential thing kind of going on there. So there we go. It's probably an extremely long video. Apologies for that, but you've not heard from me for a good couple of months, so I hope that was of interest to you. And again, look for some interesting stuff on Emini-Watch in the next year, kind of bigger pieces of content and multiple time frame indicators that will finally be released. Anyway, I hope your family is well. I hope you have a very successful 2016, and good luck with your trading.